And today on the show, we are joined by Kunal Khattar, founder at AdvantEdge, and we will be mainly discussing, obviously, the issue that is at hand is in terms of the Supreme Court banning the bike taxis in NCR region. What does that actually mean for some of these companies that are working out there, Rapido specifically as well? And overall, we'll be talking about the EV space, auto mobility space. How is everything shaping up there? Kunal, thank you so much for joining in with us on ET Now this evening.
Thank you
Kunal,
so much for having me.
Obviously, with the I'll start with the issue at hand then, and obviously the Supreme Court of India just a few days back overturned Delhi High Court's decision that allowed the bike taxi aggregators like Uber, Ola, Rapido to operate in the national capital. I just want to understand in terms of obviously the impact that you would have. Obviously, Rapido comes in terms of your portfolio, the investment there as well. So what is the impact that one could see there, and what are the discussions that you are having with Rapido as of now as well?
So great. Absolutely. So Rapido has three business verticals. I mean, bike taxi is one of three, actually. They're also in the three-wheeler business, and they're also in the business of food delivery and other B2B solutions, especially in partnership with Swiggy. So this impacts only one of three businesses, number one. Number two, Delhi is one of 100 cities in which we're operating in. So there is a short-term impact for sure, but it's not a material amount of the overall business of Rapido. I think, of course, it was unfortunate that the Supreme Court thought this way. But actually, if you think about it, there is a very important silver lining to this, where the Supreme Court has asked Rapido to temporarily suspend their operation, and have asked the Delhi government to issue the guidelines for allowing the operations of bike taxi or ride hailing by the end of July. So I think that's a win-win for us. The advantage that we get is now that once the guidelines are issued, it will be easy for Rapido to start operating within those guidelines, hence making it an important milestone for us to be able to tell our customers that we are now operating under the ambit of the guidelines issued by the state government.
Absolutely. So maybe the guidelines would come in by the end of July is what we're expecting. But, this issue of two-wheeler taxi bikes, is that only pertaining to the Delhi as of now, or are you in other states also facing any issues, or is there anything going on in any other states or cities that you're operating in, Rapido operating in?
Sure, absolutely. So, the central government has actually issued a mandate allowing the use of privately registered two-wheelers for ride sharing and bike taxis. But transportation being a state subject, the central government says that they are all right and they have approved the use of two-wheelers. But every state must issue guidelines independently, and Rapido should follow those guidelines. I'm happy to announce that a majority of states have issued those guidelines, and Rapido is following the same. Honestly speaking, as a company, we're responsible enough where we have actually on our own approached all the different states to ask them for the guidelines because we would like to operate in them. So this is like a moving target. There are states that have issued the guidelines. There are states that have asked for time to issue the guidelines. And there are states now where we've had to go to the court, and the court has asked these states to issue guidelines. So if I were to sort of put a number there, like I mentioned, we're operating in 100 states, 100 cities across pretty much every state in the country. We are a majority of states and cities now have those guidelines under which Rapido is operating.
Okay, so guidelines in place in most of the cities that you're operating in, or obviously in Delhi, we'll be expecting those guidelines hopefully by July end as well. So fingers crossed for that, Kunal. But, let's talk about the EV space, right? That's the one that has been the talk of the town, not only this year, but in the last couple of years as well. And obviously that has gained traction. Now, one point I want to highlight is that, in terms of firstly, we had electric vehicles mainly in those commercial vehicle space. And now the rise is even coming in the passenger vehicle space. What is the change that you are seeing? Could you give us an understanding on that? Because obviously AdvantEdge is mainly into, you all are into this auto mobility funding. You talk to a lot of players in that space. What are you seeing the change? Where are you seeing the change coming in, and where is everyone looking to invest in?
Absolutely. I think one of the things that, as they say, nothing is as powerful as an idea whose time has come. So I think EVs fundamentally today are gaining traction and customer love for a number of reasons. One, of course, is that we have consistently seen very high petrol and diesel prices. starting with the Ukraine war. Prices really haven't come down at the gas pump in the last 18 months. So there is a lot of demand for EVs because of the low operating cost. Second is, as you're aware, 14 of the 15 most polluted cities in the world happen to be in India. So I think there is a high level of climate awareness, and citizens now are realizing that what is it that we can do to make our cities cleaner for our children and our future generations. And buying an electric vehicle is one way that an individual can contribute towards the cleaner air that which we all must live and breathe in. And the third thing is government incentives through what was initially FAME 1, FAME 2. That's also becoming very, very important and has made EVs affordable. And finally, if I look at the fact that the fastest organizations that are adopting EV, as you rightly said, were commercial companies, companies that are in e-commerce, 3PL, food delivery, ride hailing, etc. As you know, there is a somewhat of a funding winter in the startup ecosystem, and investors are now insisting on companies becoming profitable. Well, one of the ways they can become profitable is to reduce their costs, and 60 to 70% of our operating costs of a mobility or a transportation company is the fuel, and EVs are 70 to 80% cheaper in terms to operate than that, which is why we are seeing huge demand for customers, both on the commercial side and passenger cars side, where we're seeing EV penetration growing every month.
Right, Kunal, I'm just going to pick up a point from what you are mentioning in terms of obviously FAME 1, FAME 2. But in terms of FAME 2, that has actually cut some bit of a subsidies, is what I understand, in EV two-wheelers. And that has sort of impacted some bit of the registration there, and pricings are going higher. What's your view on this one? If I'm not wrong, this is the current scenario, is what I'm getting to understand.
Actually, it's a question of how you look at it, whether glass is half full or glass is half empty. In FAME 2, they had allocated certain amount of budgets for different form factors. So there was a percentage allocated for two-wheelers, percentage allocated for three-wheelers, and a percentage of that was allocated for buses. Actually, customer demand for two-wheelers was so good that the two-wheeler subsidy got exhausted. So when you think about it, subsidy actually was supposed to go down to zero from where it was. But what the government has done is they've reallocated the budget or the subsidy that was kept aside for three-wheelers and buses and have brought it back into the bucket for two-wheelers. So it's not that the subsidy has gone down from what it was. The way I look at it is actually subsidy has gone up from what it was, which was zero, because the entire subsidy for that was exhausted. So there has been a little bit of a dip because suddenly prices have gone up. But at the end of the day, if you look at total cost of ownership over a 5 to 7 year period, EVs are still far more affordable than traditional ICE vehicles.
Right. I'm going to pick up another point, and before what you were answering was the funding winter point. Obviously, it's spoken about it. Everyone knows about it. And like you were also saying right now, that, everyone started focusing on that, is that profitability number there? Then only they want to look at things and invest in things. What is the current scenario in terms of funding winter? Is it still as bad as we saw, post-December kind of a situation? Has it started improving? What are the talks that you are having with some of the companies as well as your LPs as well?
Sure. So honestly speaking, I think it's sector by sector. I think there were some sectors during COVID or post-COVID actually saw a lot of capital getting accumulated, and we saw valuations that became disconnected from actual metrics on the ground and scale that companies were. I think a lot of investors assumed that companies will grow into the higher valuation that they started giving. There was a lot of FOMO because of excess liquidity. What we're seeing now is that those companies have not scaled as fast or as much as we thought they would, and hence there have been a number of instances where we've seen dramatic markdowns in those valuations. And those are sectors that actually had a bull run during COVID, e-commerce, edtech, social, food delivery, et cetera, where people were sitting at home and consuming content or ordering things. I think what's happened now in certain sectors which didn't necessarily see valuation run away, sectors such as shared mobility, such as EVs, where actually they had the toughest period of time during COVID when businesses collapsed, where valuations remained realistic. And now we are actually seeing the opposite of a funding winter. There's huge amount of investor interest in business opportunities across the mobility and electric space, and we're looking at that for sure. So rather than saying that we are in a funding winter, I think realistically what we have to recognize is that in the markets that we are operating it as a fund, this is actually a very realistic and a time where we think it's the right time to deploy capital. Valuations are realistic, founder expectations are realistic, and we're actually getting to see businesses and opportunities where focus is on unit economics. And whatever growth and burn that's happening is because we want to scale that business. We as VCs, we kid ourselves that if every startup became profitable, VCs would be out of business because they wouldn't need capital anymore. So I think we're balancing that out. So fortunately, we're at a time where the sectors that we are deploying capital in is actually seeing a lot of investor interest.
Okay, and obviously I just want to talk about then in terms of what would you be looking at funding right now? You said it's the right time to start deploying. Valuations are not that high. Founders have realistic expectations as well. Anything interesting you are looking at in the automobility market? What are you seeing new coming in up in terms of trends that you have found interesting to invest in?
So we are in the process of raising our third fund after being successful in our first two funds. The thesis for Fund 3 is that we're opportunistically looking at companies that are going to accelerate in the transition from ICE to EV. So these are companies or businesses which are technology driven or creating businesses that are complementary in nature, which is helping B2B as well as B2C or customers who want to make sure that their next purchase is an electric vehicle. So think about EV financing, battery leasing, battery management system, deep tech companies in that space. We're looking at rapid charging, battery swapping, and things like that. We're actually partnering with a number of OEMs and helping them in distribution, sales, insurance, and aftermarket. Like I said, this is ground one. I think now the one thing is people are no longer thinking of when EVs will become relevant. It's now just a question of how we scale this business going on ahead. So in sectors that we are investing in, there is a number of opportunities for us to deploy capital. And we're actually closing almost one or two transactions every quarter.
Okay, and Kunal, lastly, I just want to know, obviously a lot of opportunities you're highlighting in terms of EV financing as well, EV batteries as well. I want to understand in terms of anything that you would look in terms of when you are looking to fund right now, what would the value of that fund be? What would be in terms of the amount that you would be looking to invest? Will it be those early stage fundings, or maybe you would move past that as well?
As a fund, we've predominantly focused on early stage investments. And so we've done our first investment in EV was 2018. So we've actually spent 5 years in understanding this category. So we've identified about 12 opportunities to fund. Now what we're doing is we're actually looking for the founders who have the right founder market fit to build businesses in those sectors. So for us, that's far more important than anything else. And we are happy to back founders in a pre-product, pre-revenue stage as well and help them grow that business. In terms of check size, we're pretty flexible. We've done everything from $250K to $2 million in capital. And we love to co-invest with other funds. So we have a very collaborative way where we look at opportunities.
Okay, Kunal, thank you so much for joining in with us this evening on Startup Central and giving us your time and giving us obviously that understanding on what is happening in terms of the bike taxis ban in Delhi, talking to us about the EVs, automobility market and the growth and opportunity there. Thank you so much, Kunal.
Okay, thank you so much. Bye-bye.